accountant should be saving you money. I know you see on TV and hear on the radio about these online accountancy software packages like Xero and QuickBooks, and they make it look so easy. You just upload your receipts, you put your bank statements in, or it automatically feeds in from your online banking, and there you go, your tax returns are done for you. I mean, what it's not doing is saying or advising, is that the most tax efficient way for you to pay yourself? Is it the most tax efficient structure? Are you going to save any money by doing this? Are you claiming the right things? The information in that system is only as good as the information that's put into that system. So yeah, they do make life easy for the accountant and bookkeeping. They do. I think the way they're advertised is as if, well, you can do it all yourself, but really an accountant can save you money. So that investment that you make in an accountant, the cost of that accountant, a good one, you should be making that and more back by the services and advice that they give you. So thinking about, in summary, kind of 7 ways that an accountant can save you money. I mean, if you think of one thing, to free up your time. I mean, do you really want to be going at home and uploading all your receipts and making sure that you've collected every receipt for every transaction and put it into the system? You set up your business not to do accounting, you set up your business to do your business, and by employing an accountant, they can save you time, and that alone has got to be worth more than the money that you spend with them, because time is such a precious commodity. But it also frees you up to be able to concentrate and focus on your business. So having a good finance person within your business can allow you to have the freedom to go and do what you love. I touched on it there, but they should be making you more tax efficient. Can you claim everything? Are you claiming everything? Is it the right structure in terms of the way you take money out of the business? Is it a salary and a dividend the best way? Does your wife work if you're married, or your husband? If they don't work, then they're losing their allowance. So there's ways you can structure your company to be able to take advantage of that. There was a client that came to us that had already tried to do things on their own. It was too late, but they sold effectively their business, but it was an asset within the business. But had they done it in the right way, or a tax efficient way, it literally would have saved hundreds of thousands of pounds on corporation tax. So the small fee that we're paying us, had he done it at the beginning, he would have got that 100,000 times fold back by simple advice on what the best structure was for selling this asset and his business. They can also help you avoid fines and penalties. I mean, that alone, you've got to keep thinking about, well, I've got to do my VAT return, I've got to file it by the 7th, and when's the next quarter, and my tax return, and pay as you earn if you've got staff, and all these. These can be a nightmare, and HMRC are not forgiving. As soon as it's a day late, they can whack a fine on you for £100 for self-assessment and VAT penalties and interest, and you get a black mark on your name, and then you could be sort of on the radar for a tax investigation by them. So, a good accountant will be giving you plenty of warning of deadlines and making sure that you do keep to those deadlines, and making sure that everything's filed on time and plenty of time. So that's another way that they can save you money. A good accountant will also be able to identify opportunities for growth. So they've got the data to hand, they know your business, they're doing the numbers, they're sitting through, and they can give you advice on where you can grow your business, where you can save money in the business. It's not just about looking at the top line, it's looking at costs and comparing to other businesses that they know. I know that's what we'll do. We'll have a look and say, I've got a client who pays this amount for insurance, it's a hell of a lot less than what you're paying, or a client does this and they pay that, and you should be paying double that. So more than just doing the bookkeeping and the accounting, they're having a look at where they can help you save money and grow your business, and maybe advise on growing. They can also help you get funding if you're looking to raise money. They can a good accountant be able to explain what the difference is between the different sources of funding are, grant funding, debt, equity, what the difference is. set you up so you're attractive enough for investors by setting up things like the SEIS assurance, which is a big tax incentive for investors, and making sure that your company's got that, helping you with pitch decks, maybe putting you in touch with investors, looking at their own client base and saying there's the potential route there from clients who are looking for investment. So a good accountant should be able to help you to do that. They can also advise on investments. They're not an independent financial advisor. Bigger accountancy firms may have an IFA within the business, but certainly things like just looking at accounts and doing tax planning like we do with clients, we'll have a look and say, you're coming up to the year end, you've got quite a lot of cash in the business, we could reduce your corporation tax by using your pension allowance, which everyone gets £40,000 a year. So if you've got 2 or 3 directors in the business, each of them can make a £40,000 pension allowance. That's money taken out of the business tax free, and it's also a corporation tax deduction, so it reduces your corporation tax bill. If you've got what I call lazy cash, so a lot of cash in the bank, and you're earning £70 a year on the interest because you get nothing for interest at the moment, look at setting up like a general investment account or maybe a corporate bond. With one client, we've had a look at theirs and put them in touch with an advisor who can help with that. They had over £500,000 of cash sat in a bank account earning literally nothing in interest. They just put it into a corporate bond and get 5% back now, and it's safe. It's a bond, so it's not like at risk through making an investment in equity, and it's readily there available for them to access when they need it. They're not a risk taker. They've got very risk adverse to investment, so this was perfect for them. But at least now that money's earning something for them rather than sat in the bank doing nothing. So a good accountant should be able to do that, and they'll be able to give you invaluable business advice too. A good accountant will come across a lot of businesses and experience, and certainly with myself, I've been in business, I've owned a business, I've sold businesses, I've had businesses that haven't done well, they have failed. I've been very much in that person's shoes, so using that experience, and then also using the experience that you have with clients and getting them, a good accountant should be giving you that, and by you doing it yourself on Xero or QuickBooks, you're missing out on that advice. And there's no coincidence that successful businesses will always have a good CFO, Chief Financial Officer, a finance director. Most small and medium businesses can't afford that, or they're not at a stage to have that. But still, a finance partner is still an integral part of your business and a very strong part of the business. And having a good accountant, yes, it's going to cost money, but a good accountant should be adding so much more value to your business from all the things I've mentioned there. But ultimately, they should be paying for themselves and more.